if we're correct, there'll be a period of disinflation, maybe a brief deflation scare, but what's going to happen, and we suspect it'll happen, and we talk about it in our report. We basically say we don't know what the policy response is going to be. So when we see the policy response, what will it be? Will it be more massive QE from central banks like the Federal Reserve? Will it be yield curve control? Will it be fiscal stimulus? So we'll have to see. So we suspect, bankers, it's inflate or die. Deflation and disinflation, unless it's slow and steady, they don't like it. So we suspect after we see the policy response, which will come, it'll be late, but it'll come. We suspect it'll be another round of inflation. So we're kind of in this disinflation, deflation, inflation roller coaster where you need to constantly create credit, but then eventually you got to then stop the credit flow because inflation's running too hot, and then rinse, repeat. It's a cycle. It's a cycle of stagflation. We think. Again, we don't know until we see the policy response. But what we're pretty confident in is that we're going to get slower GDP growth, risk-off selling in risky assets, and a flight to safety like government bonds, the U.S. government bonds.
Yeah, and that helps because there's lots of debt sort of rolling off this year as well. So if it's a lot harder a lot of that was refinanced during COVID. It was sort of very low rates. So then now if you have interest rates coming down, that could potentially benefit the refinancing of this economy for another 5 years.
Yeah, correct. So Secretary Yellen issued a bunch of the U.S. debt on the front end of the curve, which a lot of people criticize because that's kind of what banana republic third world countries do. They issue very short-term financing because that's only because that's all they can do. This will give Scott Best, and if a recession does manifest and yields come down, which I suspect they will, and they're in the process of doing that, that'll give them an opportunity to term out a lot of the debt into longer term paper. And there'll be demand because in a recession, there's a flight to safety and a reallocation out of risk into